Hey everybody, welcome back to another video. The wrong savings account could be quietly stealing hundreds of dollars from you every single year, not because of bad spending, but because you parked your cash in the wrong place. So in this video, I want to show you exactly how to choose the right high yield savings account for yourself, avoid the traps, and make your money work smarter and harder without any extra work from you. All right, so with this being said, let's get right into it. And most people unknowingly lose money each year by picking the wrong place to park their cash. Traditional banks, like perhaps you've heard of them, Bank of America, does that ring a bell? Maybe Wells Fargo, Chase. These big banks out there typically offer less than 1% for your money. So let's say that if they're offering 0.01%, which I've seen, that is just $1. That is $1 for every $10,000 that you save. And the contract is huge when you compare it to a high yield savings account, which is typically offered by online organizations out there, which are paying anywhere from 3.6 4.5%. And that is a massive difference. So assuming a 4% return, you are talking about $400 a year for the same amount of dollars that we gave as an example, at no additional extra effort from you, right? Just better choices, just more information. And that's why I wanted to give you the tools you need in order to choose the best high yield savings account for yourself. And this comes as somebody who has been using high yield savings accounts over the last couple of years. If you don't know anything about me, I'm a data engineer, I'm a mentor, and I'm an educator. This channel is all about helping you increase your income, protect your wealth, and build financial security. If you find this video helpful, by the way, make sure that you like it, subscribe, let me know where you're watching from. I would love to get to know you, and check the links in the description for all the tools I recommend to help you start building your wealth and the tools that I'll be covering here in this video. All right, so let's get right from the basics and right from the start. And what exactly is a high yield savings account? And a high yield savings account, if you've never heard of them, is just that, right? It's a savings account that pays you significantly higher interest than the national average. Now, there's a couple of key benefits to using these high yield savings accounts. And that is, of course, the higher APY, which, as I gave in the example previously, it gives you about 10 to 20% higher interest than the national average savings rate. Also, it gives you safety because these organizations, at least you shouldn't pick any organization that is not as FDIC insured, which some commercial banks are not, believe it or not. But FDIC insurance up to $250,000 per depositor per bank. In my book, that's a minimum, especially if you have a lot of money. That's when you got to diversify, quote unquote, and put your money in different places. But that's a subject for another video. And also, a high yield savings account should give you liquidity, right? Access to your money when you need it. If it takes you a month to access your money, then in my book, that defeats the whole purpose of having liquidity in your high yield savings account, because you need the money now. So these are typically offered by online organizations, credit unions, and fintech companies, and not the traditional big name banks that I've mentioned previously. And the reason for that, it's because online banks have lower overhead. They don't have branches. They don't have to pay the people that are working in the branches. They don't have to pay rent and the benefits and like all this stuff. So they can pass on those savings on to you, the customer. But of course, not all high yield savings accounts are created equal. So let's break down how to pick the best one for yourself. All right, so here's 4 keys that we're going to be looking into when it comes to choosing the best high yield savings account. Now, I am somebody who has been going over these financial organizations, researching the best tools out there to help you increase your income, build and protect your wealth. And I've noticed there's 4 key aspects to a great high yield savings account. Of course, number 1 is the interest, or the yield, as people in the personal finance world call it. And in my book and in my experience, many times it's not needed that you have to go with the highest interest out there. Many times you just want to be competitive. And nowadays, a competitive interest rate is around 4%. That's about it. Now, one key insight I want to share here with you is that we need to be mindful of some HYSA rates and tricky terms that some not so popular. I've noticed this with mostly with banks or organizations that are trying to get their footing in the door, and they want to become more popular and get some customers, and they give you outrageous interest rates. And little did you know that interest goes away within a month or 2 months or maybe 3 months, right? And The problem is that many times it's very deeply buried in the fine print, so they're not upfront about it, and so that's what bothers me. So it's important to, whenever you see a very high interest rate, number one, it is going to get our attention. Of course, we all want to make more money, but at the end of the day, we have to be mindful that, hey, if it looks too good to be true, okay, what's the catch, right? And that's when you got to go really deep into the comments, the reviews, the experiences that people have had, and of course, the fine print itself. So interest rate, of course, that's one. If the bank is really upfront about it and it tells you this is what you're gonna get, this is when it changes, then hey, I am all for it. Now, another feature that is important when choosing a high yield savings account is, of course, the security, the FDIC insurance that is clearly stated, and of course, the access and fees, which entail fast, relatively speaking, transfers, easy access, and no hidden fees. So let's go over each one of these key aspects of a high yield savings account so you can be more informed and make the best decision for yourself. All right, so Uncle Buffett is here chilling, and whenever he hears interest, like, hey, like, who's earning some interest over here? Like, let me make some money. All right, so here is what we're going to be covering in this first pillar of a great high yield savings account. And the APY is the feature, right? That's the first thing that we all look at. The competitive rate right now in 2025 is around 4%, as I mentioned, and we need to avoid teaser rates to make sure that we are not then later calling customer service and then complaining that, hey, you're not giving me my rate. Now, another thing that I want to check here, or that I want to let you know, is that some organizations, like, trust me, I've been getting a lot of insight from like customers and experiences from you guys, and it's amazing the amount of, what would you say? I don't want to say this the wrong way, but there's a lot of sneakiness in a way, right? So what some banks do, again, I'm going to be, I'm going to tell you what I've seen people experience. Okay, some banks, they don't upgrade your interest rates when they start offering a higher interest rate. So in order to do that, you have to be mindful of your interest rate in your account, check what the bank is offering, and giving them a call to upgrade you to the new savings account interest in case they increased it. Now, what most banks should do, what all banks should do, of course, is if they're off, they should just either upgrade you or downgrade you to the latest interest they have, period. Correct? I think we're all in agreement there. But that's just kind of like a way for some organizations that try to be, like I mentioned, a little sneaky, and they don't want to give you the highest interest, right? Like it's kind of weird how some organizations, they sacrifice their loyal customers in the attempt to save some money and also gain new customers. So anyways, that's probably a subject for another video, but I want to make you aware to, number one, keep your eyes on whatever organization you choose. Keep your eyes on your interest rate and make sure that the bank is giving you the latest and greatest. So avoid that, and also make sure that you are checking, of course, the minimum balances, because some organizations require maybe $100, $1,000, $5,000 in order for you to get that APY or interest that they are offering. At the end of the day, one of the things that I've learned is that when it comes to choosing an organization where we'll be parking our hard-earned money, stability matters more than chasing the absolute highest number, right? And whether or not you feel uncomfortable with an organization, I think at the end of the day, that's going to make the biggest return on our emotional and psychological health. So a consistent rate beats a flash sale that disappears next week. That's personally what I've learned. All right, so another pillar that we need to talk about today when it comes to choosing the best high yield savings account for yourself is, of course, the FDIC. Is your money really protected? The security. We all want to sleep better at night, and what a better way to make sure that your money is protected and insured. So most high yield savings accounts are FDIC insured up to $250,000, but always confirm, right? It's always good to confirm. And we confirm that by going to the website, and many banks out there are very open, like, hey, FDIC insured. Like, just for the record, I will never talk about a bank that is not FDIC insured here in the channel. So let me just put that out there and make it clear. All right, so if you are somebody that has one account and then you have a joint account, then each depositor, each owner, if it's a joint account, would be eligible to get the maximum FDIC insurance. So you could increase your FDIC insurance up to $500,000, if you have a joint account with two owners, so $250,000 for each. Now, some insight here, there is a way that you can also increase this FDIC insurance number all the way to 1.25 million. However, at that point, you have to start adding beneficiaries. You got to start dealing with trusts. It's a little bit more complicated, but if you do have a lot of money, then, well, first of all, congratulations. But it's also another way for you to make sure that your money goes to your loved ones and it doesn't stay, of course, with the bank, and they don't go through like any unnecessary additional paying that if you are not here to take care of the money and then give it to them yourself. Now, many organizations are now partnering with multiple banks to extend coverage beyond the $250,000. This is different, by the way, than what I just talked about. And this is called the sweep program, right? So some banks out there, like maybe it is SoFi comes to mind, they are offering FDIC insurance up to $3 million. Fintechs like Wealthfront offers up to $8 million. And even brokers like Fidelity, which offers up to $5 million. So that's just another tool that these banks are using in order to give you more safety, more security, and give the perception that they are the ones that should be handling your money, right? So at the end of the day, the really cool thing here is that we need to know exactly where your money sits and who's insuring it from before you deposit, or like how much insurance you have. Make sure, of course, that you are within the threshold, so that way your money is not sitting there not protected. So always make sure that your money is within the threshold, so FDIC, so that way you can sleep better at night. Okay, so now with that being said, so far we talked about making sure we get the interest, that we talked about the security, and now we're gonna be talking about access and how fast you can get your money, right? So this is great, like interest is great, but if you can't touch your money when you need it, that's an issue, right? So when it comes to access, the first thing we look at is, of course, the transfer speed. Whatever you are, especially when you are dealing with online organizations, the best accounts transfer you're checking with between 1 to 2 days. Some even offer same day availability. Like, for example, if you want same day availability, at least that is marketed to most people out there, Marcus is an organization that does give you same day availability for your money. However, there are other ways that you can access your money same day. For example, if it is a business day, you could set up a wire transfer. Also comes within hours, if not less. And what I've noticed is also that many banks out there take about 1 to 3 business days. Anything more than 5 days, 6 days, 20 days, that's a little outrageous. And to me, that's an issue. Now, ATM access. Now, to me, this is a nice bonus, but it's not essential. And some banks give you ATM access directly for your savings account, which is great. And some others give you access through an ATM, but you have to open a checking account. We're gonna go over a couple of these examples here in a second. And then another thing is withdrawal limits, right? So if you have ATM access, like, hey, can you just go and withdraw unlimitedly from your high yield savings account? And the truth is that no. Some banks out there, they give you a limit of 6, sometimes 10. I believe LI and Capital One are two of those organizations that give you a limit of like 6 or 10, around that range. And the reason for that is because back in the day in 2020, the Federal Reserve had up until April 2020, the Federal Reserve had a regulation that they said, hey, you cannot let your customers withdraw more than 6 times or 10 times. And when COVID happened, they said, okay, we're going to allow people to get their money anytime they want, as many times as they want. And that's when banks basically pulled out the regulation, and now everybody could take their money unlimitedly. Now, some banks are kind of going back to how it was pre-pandemic. And that's why you see the little 6 withdrawal limit there. But if an organization, I want to say that it's safe to say that if you use your money and you withdraw less than 6 times a month, then I think most people would be okay with this, right? Now, one bonus I want to share here with you is that what is important is also the warm and fuzzy feeling that you get with an organization, right? Like at the end of the day, it's that confidence, trust, and familiarity that beats any interest. And if you don't feel comfortable, then it may not be for you, right? So if it's not a hell yeah, it's a no. It's one of the philosophies that I run my life with. So just make sure that you are comfortable and trust an organization before you go for it. All right. So now, of course, last but not least, let's talk about fees and not paying to access your own money. Now, a good high yield savings account should be completely free. You should not be paying for access to your money. any penalties for withdrawing too many times, like all of that stuff, it's out the window. It's 2025. Banks are dying for your business, and you should be able to give them your money like at no cost to you, right? They literally are making money off of you, and they're gonna charge you money to store your money. It just makes no sense. So avoid any banks with monthly fees, minimum balance penalties, transfer fees. Now, a few popular options for you here if you are interested in high yield savings accounts. Now, we got SoFi, Barclays, and CIT. Now, these are three very popular options. And number one, we got SoFi here that is offering 3.8%. Now, this is one of the most consistent rates that I've noticed, and I've been looking at these rates for a while. Okay. And SoFi has been offering one of the most consistent APY rates, regardless of what the Federal Reserve is doing. They're saying they're going to decrease interest rates. They said they're not. They pull back, like the speculations are happening, but they just keep it at 3.8%. And to me, that gives me a sense of stability. That's just me. They're not the oldest. They're not as old as CIT when it comes to like breadth and history and reputation, but they're getting up there with respect to popularity, that is, in at least for high yield savings accounts, right? And then also, they just started this program, which they have extended a couple of times, which makes me think that it's getting people more interested in SoFi. And that is how they give you an extra 0.7% APY for 6 months with SoFi Plus. Now, SoFi Plus it's a service that they started offering only a couple of months ago, and where you pay $10 and they give you higher interest rate on your savings account, but they give you many other interests, right? They give you many other benefits, that is. Those are not the focus of today's video. If you're interested in learning more about SoFi, then there's going to be a link in the description, or you can also watch my full review on SoFi. I've done reviews on all of these three organizations, and that's the basis from which I'm speaking. So you can take your interest rate all the way to 4.5%. And they also do have a bonus that's been going on for a while, which also gets a lot of people interested in SoFi when you sign up. And you do have to have a 5,000 direct deposit every 28 to 30 days. So just be mindful, full transparency here. And these are all the benefits, but of course, they do have requirements that you got to meet. You don't just sign up and then get them all, right? So just make sure that you understand what you're getting into. Barclays offers a tier savings approach where if you have 250K or more, they're offering 4.1%. Otherwise, you get 3.9%, which is still pretty good, right? 3.9% is still awesome. 4.1%, great. And CIT, on the other hand, they give you a 3.9%. They also have a very approach, kind of like Barclays, a tiered approach. And they give you a 3.9% with a Savings Connect, and they give you a 4.0% with their Platinum Savings Account. And with this one, you do have to have at least $5,000 in your account. So 3 different organizations to the target, I want to say different types of customers, but at the end of the day, they all have great products and they are offering great competitive APYs for the high yield savings accounts. All right. So when it comes to minimum balance and account fees, no account fees for any of these accounts. And the only thing that I want to stand out here is the $100 to start with CIT. You don't need any minimum balance for Barclays and SoFi. CIT does need $100 to start. They are all FDIC insured. I know that SoFi takes it all the way to 3 million, which as mentioned, how they come about that, how they do it. But it's safe to say that for most people, I include myself here, of course, a $250,000 FDIC insurance is enough, right? So that's good enough. Now, the access, of course, now we're talking about a little bit of a difference here, which you need to know. And that is, they all give you the ability to do transfers, right? You can transfer, you can do it through your third-party bank organization. So you may have to wait a couple of hours, a couple of business days. And SoFi and CIT give you ATM access. But here's the trick. They give you, so SoFi, by the way, opens automatically a checking account when you open a high yield savings account, and they automatically give you a debit card. That's what happened to me when I opened it. And with CIT, you have to open an e-checking account, and they give you your ATM access card, your ATM card, and then that way you're able to transfer from your high yield savings to your e-checking, and then you can withdraw money that way. Now, Barclays is a little different, and they only have savings and CDs. If you want to use an ATM with Barclays, you need to have a credit card. At that point, as far as cash advance, that's a whole different type of video. But with Barclays, you can, when it comes to high yield savings accounts, you can only transfer money to your third party, like whether it is a credit union or your regular bank out there. So with this being said, my friends, which one is for you? I would love to know. If you want to sign up with any of these organizations, SoFi, Barclays, or CIT, remember that the offers are limited. SoFi gives you a bonus up to $300. So make sure that you check the links in the description to look more into these organizations. And if one is for you, then make sure that you go ahead and sign up. If you enjoyed this video, please like it, subscribe to the channel, share it with a friend, and let me know where you're joining from. Thank you guys for being here, and I'll see you guys on the next one. Take care. Peace.